Eric Muaded, Muaded.com, March 14th, 2016. Let's take a look at FCX. One more look here after last week's analysis on the chart. We can see here that right now, at the beginning of the week, we are coming and moving above the recent daily closing high. So that's a daily breakout. The level the stock needs to hold above is 9.86. If the stock can stay above that price, that's going to be indication of momentum to the upside. Also, if the RSI on the daily can hold above 69.1, one can expect higher prices. Now that is what is going for the stock in terms of bullish argument. Now if you take a look at the bearish argument, I think the bearish argument might come into play by the end of the week. For example, here we are seeing that we are coming back to test the previous recent break in price. If you take the daily closing low there, that daily closing low, extend that line like that, we can see that we've been unable to move above that previous break here. So that break continues to be showing that the stock is trading below that line, which is a problem because we need to clear that bad taste since the break there. Also, take note that if we break this RSI trend line on the daily, any break of this trend line might suggest that now it is going to be time for a reversal and probably a sharp move lower. So watch out for that break. If we take a look at the weekly, as we had discussed previously, we can see that we are still expecting some type of resistance around this level right here, which corresponds with the previous break here in 2014 of the highs there in the 30s. We came here, we touch a red line for those highs, and again here. So even though we are starting the week with a nice gain, if we turn red for the week and show rejection on the same line, on this red line, one can expect a serious pullback from current levels. If you take a look also at the hourly chart, here I am using RSI period of 26. So that's the RSI setting on this hourly chart. And we can see that we've come back to test the recent break. So there was a break recently here. That break brought the stock off those highs, and we are coming back to test this even as the stock tries to break out above 9.86. So I think around here one can expect the stock to start stalling if it cannot clear that hourly resistance. So in summary, if we go back to that daily chart, as long as the stock is breaking out and holding above the previous recent daily closing high, as long as the stock is above 9.86, one can say that the stock looks okay. But if the stock stumbles and moves back below 9.86, that would be a trigger to sell or even to go short. Eric Muaded, Muaded.com. As always, good luck, peace, and blessings. ESCS.